Hello and welcome to today's 18 Group webinar, From Data to Impact, Empowering Asset Managers and Owners with ESG Solutions for Net Zero Transformation. My name is Sarah Underwood. I'm an editor here at 18 Group and I'll be moderating the webinar. Our expert speakers today are Anne Scott, Global Climate Solutions Lead at Egan Asset Management, Wendy Walford, Head of Climate Risk at Legal & General, Laurent Babican, Global Director of Data Products at CDP, and Elizabeth Seep, Head of Sustainable Investing Products at Rhymes. I'll ask them to introduce themselves in just a few moments, but first, just so that you can make best use of the webinar, to the side, the right-hand side of your video screen, you can see a Slido panel. We'll be running 4 polls today. I'll let you know when they're coming up, so do please answer those when they come up so we can gauge industry progress and experience here. There's another panel for your questions. Please ask these whenever you would like to, and we will gather them up and put them to our speakers before the end of the webinar, and we'll ask as many as we can, so please feel free to put yours right there. Okay, enough of me, and let me ask our speakers to introduce themselves. Anne, come first to you. Please, could you introduce yourself and tell us a little bit about your interest here?
Hi, my name's Anne Scott. I'm Global Climate Solutions Lead at Aegon Asset Management, and my focus is to promote our climate transition approach to support the consistency of our climate research process and to embed some climate solutions into our fixed income products. And I work alongside our fixed income and responsible investment teams.
Lovely. Laurent.
Hi, I'm Laurent Babican, responsible of data at CDP. CDP, as you probably know, is a not-for-profit organization, which is the largest environmental reporting platform in the world. And then when we collect this data, we give this data to investors. We have something like 750 signatories, of which my partner in this call. And they use our data to do their e-work on the ESG. We only treat climate, water, and forests, and we're starting now with plastic and biodiversity. We would like to cover all the planetary boundaries this decade. And the goal of CDP is to increase market transparency about all those risks and opportunities so that investors can make enlightened decision in a world that needs that so much. That's it.
Okay.
Thank you.
Hopefully we'll be giving out some enlightened information today. So let me come to you, Elizabeth, if I may.
Yes, hi, thank you, Sarah. I'm Elizabeth Seep, and I'm with Rhymes Technologies. I lead our sustainable investing products at Rhymes. And if you haven't heard of Rhymes, we are an enterprise data management company, and we have a full ESG managed data service solution that we offer to investment companies across the globe. Thank you.
Excellent, thank you. We are expecting Wendy, so I'll let her introduce herself when she joins us. So meantime, let's get started with an audience poll question. And it says, how much progress has your organization made on its journey towards net zero? And while you place your votes on that one, let me please come to Anne to set the scene by talking about how much progress you see amongst asset managers and owners in terms of their journey towards net zero.
Yeah, I mean, I think there's undoubtedly been progress. I mean, for example, the Net Zero Asset Managers Initiative has more than 315 asset managers signed up. That is, you know, $59 trillion in assets that are committed to achieve net zero alignment by 2050 or sooner. And the Net Zero Asset Owners Alliance covers, I think, something around 86, 87 asset owners, you know, with, you know, around 11 trillion. So, you know, you can see that there is a real direction of travel. But equally, I would say that, you know, more is needed. Not everyone's set targets. And for asset managers to invest for net zero and meet the commitments very much depends on the mandates that we agree with our clients, the regulatory environments in which we all work. And the commitments are also made in the expectations that governments follow through on their own commitments to ensure the objectives of the Paris Agreement are met. So, you know, the direction of travel is very clear. There has a lot been undertaken over the last several years, but there is still much to do.
Thank you, Anne. Laura, what's your view there? How are you seeing progress?
I mean, if we are honest, we cannot say that there is a big progress, right? Because the emissions are still rising 1% per year, while they should be decreasing by 3 to 5% per year if we are to meet the objective of 2030 at least at the EU level and also worldwide. So we have a couple of net zero alliance, which are all embedded into something called GFANs. Some of the alliance are problematic right now because, for example, the Net Zero Insurance Alliance has a problem because of what happened in the US, and de facto it's not really working anymore. But we have the three others which are much stronger: the Net Zero Banking Alliance, the Net Zero Asset Manager Alliance, as it was said before, the Net Zero Asset Owner Alliance. They are trying to create a framework to have net zero investment strategy or framework to follow to build net zero portfolio of debt and equities. But we are late. So it's good. They exist. They need to do much more. And they need to use tools like the Science-Based Target Initiative, which, by the way, I think it's important to say, change its corporate governance 2 weeks ago. There is now a charity at the top with a company below the charity. The profit of this company is only there to finance the charity. And I think it was very much weighted by the market. And the net zero, the Science-Based Target Initiative is probably the best evaluation of Scope 3 on the market. And the good news is that now we have the sisters of the Science-Based Target Initiative, which is the Science-Based Target Network. I think we're going to discuss that later on, which is good, coming on water, land use, biodiversity, and oceans next year. So they clearly, investors need to set a target to follow this process to become themselves SBT approved, because there is a process also for investors, or to follow another net zero framework that is given by the market. But they need to do much more, and to do that, they need to engage, make much more engagement with their portfolio companies, because this is probably one of the best accelerators if we really engage with organizations to ask them to change, and to change drastically now, not tomorrow.
Okay, we'll come back to some of those initiatives and organizations that are working in this area in a little bit, some of them shortly. But first, may we see the poll results on progress. And Anne, oh, how does that look to you? That looks a little bit uncomfortable.
Yeah, I mean, absolutely, and I think that's, you know, these polls are fantastic because they give us a real breadth, because we all kind of work with, you know, sort of sets of clients in quite kind of siloed positions. So this sort of discussion and dialogue is so important to be able to say, oh, we think we're making great progress in one area, but perhaps we're a little bit blind to kind of what's going on in others. And I've been having lots of conversations over the last couple of weeks with smaller houses who just don't have the resources to be able to kind of, you know, move on this, and are looking to those that have to kind of take a lead. So in some ways, am I surprised 31% haven't started on this yet? In some ways, you know, the engagement, you know, people that dial into these webinars and so on are the engaged individuals. So perhaps that surprises me a little, but actually, you know, not really. I do think, you know, most companies, and we're sitting at kind of 46% with some more limited progress, others starting work, and a smaller amount that really feel like they've made very, very good progress towards it. So probably that is a fairly good spread. 31%, you know, percent is perhaps the one that, you know, sort of surprised me a little.
Excellent. Thank you very much indeed for that. And Wendy, let me welcome you. Wendy is the Global Director of Data Products. That is wrong, the Head of Climate Risk at Legal & General. So welcome, Wendy. And let's run another quick poll question, and it's about the organizations that Lauren was mentioning, and it asks, is your organization a member or has it been a member of these initiatives, which you can see on your screen? I expect most of you are familiar with them, but do please answer the poll. And while we do that, Wendy, would you like to talk about what types of industry initiatives are particularly helpful here and what they deliver?
Yes, thank you. So one of the things that's sort of most common around looking at net zero is the fact that this is actually quite new. And being able to understand what needs to be done, what the metrics are, and the scale and pace of change, it requires a huge degree of collaboration, as we're all sort of finding our way along these sort of new ways. So looking to collaborate across the industry and across functions is really a very important aspect of this. We have a number of memberships across the group, but some of the ones that we find particularly helpful are, for example, the Net Zero Asset Owners Initiative. As a large asset owner, understanding what net zero looks and feels like, where you manage a large diversified portfolio. How do you define the metrics, set appropriate targets? We are also members of the PRI, the Principles for Responsible Investors, and also signed up to the Science-Based Targets Initiative, which helps understand sort of what are credible science-based targets that look like for our sector. So there are a lot of tools out there, and it's really useful to be able to collaborate with other members of the industry on understanding some of the challenges, driving a collective call for additional data, and being able to be both sort of move at a faster pace, as well as working together on those methodologies.
Okay, thank you. And in a similar but slightly different vein, let me bring in Elizabeth to tell us why some firms are dropping out of these initiatives. We look at the poll results there, and it doesn't seem to show many are, but I think some are. And why is that, Elizabeth?
Well, I think Laurent kind of touched on it when he talked about the insurance group. Obviously, I'm based here in New York on the U.S. side, and there are concerns about both greenwashing and legal risks that are associated with these commitments. So, I think globally there's a big focus on greenwashing by regulators, both in the U.S., particularly Australia lately, as well as the EU. And two areas that can really be subject to greenwashing these days are forward-looking commitments, as well as products that are out on the market and the naming and what's inside of those products. So I do think that there has been a little bit of a pullback based on some of those concerns. And back to the first question, I think there have been a lot of public commitments, and actually you can see on the websites of those organizations a lot of those commitments. But now it's really about showing the market and having transparency about how you're now tracking to your targets. So it's really about proving that at this point. And obviously that's with data and tools and all those things that we're going to talk about.
Excellent, thank you. May we see those poll results, please? Elizabeth, what do you think? That's a large number of the asset owners and much less of the asset managers, and nobody here particularly dropping out, but what's your view in terms of those numbers?
Well, we do see that in the NZAM case, 20% have dropped out. So I think this is not surprising, and I don't think it should be a marker of the whole direction of the industry. Being concerned with greenwashing or legal risk and dropping out of a certain public commitment is one thing, but I happen to know several who have and are still very much hard at work on tracking their portfolios towards a net zero goal. And they're still reporting under TCFD requirements. And TCFD is becoming a global standard, both on its own, but under the new ISSB global standards that are emerging. So despite being officially part of an organization or not doesn't really change what organizations are doing underneath.
Okay, thank you very much indeed for that. Presumably that will pan out as it pans out as we go along, or we may come back to that in future. But let's go on to the meaty bit and look at some of the data challenges around this. And our last poll question for now, I promised you, it asks, what are the data challenges on the journey towards net zero at your organization? Multiple answers, so you can tick as many of the boxes as are appropriate to your organization. And while you do that, let me ask Laurent how he sees the data managers, asset managers, and owners are facing along the route to net zero.
You're asking the question to me, sorry?
Yeah, data challenges.
Yeah. So one of the role of CDP is to try to bring as much as possible good data reported by companies, and not only about climate change. Everybody's talking about climate change, but you can imagine that all the problem we have with climate change, we will have to accelerate to multiply that with many other issues like water, like biodiversity, like oceans, and we cannot wait. SBTI was created at the Paris Agreement in 2015, so we're now 8 years after. We cannot wait another 8 years to be ready for water, to be ready for biodiversity. It's too much pressing. So we're trying to do the part of what we can in terms of transparency. We had 20,000 companies responding to CDP last year. This year, we're waiting for the final result, but there was a substantial increase. And then let's not forget that there is regulation coming, and starting in Europe with the CSRD. The CSRD will start on the 1st of January 2024, will concern something like 55,000 companies. Not all of them are European. Some of them are subsidiary of non-European company, and some suppliers of European company will be concerned, at least for a subset of data. So it will have an impact all around the world. This is why it's made a lot of people freaked out when it was announced, especially in the investment world. But I think it's good to have this data, and this data is the first ESG data that will be audited in limited assurance to start with, and in reasonable assurance in 2028. So there will be a huge, massive volume of data at the end of 2024. So it will be rather in 2025, based on 2024, beginning of 2025, coming on the market, audited, and this will increase the quality of the data. And we expect that this data will go through the CDP platform as well, because not all the geographies will have mandatory disclosure. It's starting in Europe, but a lot of other regions won't. So it would be good to use CDP to make this uniformization of the data, to harmonization, to try to compare between Asia and Latin America, or Asia and the US or Europe. And I think this is good. This is good, and there is another directive at the EU. So all these data, new data, will be based on double materiality, following the ESRS reporting standard, which is another layer above the global baseline, which is ISSB, because ISSB is only touching climate change, while ESRS, the double materiality in Europe, is touching biodiversity, pollution, circular economy, and water and oceans. And all these data will come in the beginning of 2025. So it's massive, and investors need to be ready to have access to this data, because they will be able to do a much more precise and tailor-made job when they want to tackle a topic, and if the topic is material for the portfolio, which seems that it will be material. I mean, all the topic will be material for their portfolio, and it will also help serve the Net Zero Alliance around that we discussed. And yes, so I'm pretty confident with this, and I know that other countries will follow with mandatory disclosure. At the last G20 summit, there was a discussion about that, high quality mandatory disclosure that we push at CDP. So, but it's too slow, and we really need to accelerate if we are serious about the targets. It seems that we are not always serious about the targets, and we cannot increase the temperature by 1% while we should be decreasing by 3 to 4% every year. We're going the opposite direction. We cannot have government announcing that they open new oil fields and say that at the same time that they are going to be net zero, because that's just antinomic. So that's greenwashing. So we need to fight this, and we need to have the proper data to be able to make the best quality analysis and work on the impact of the portfolio. So we are on the right track, but we really need to push to 300 kilometers per hour.
Well, there's the concept, and it all sounds very good. But Anne, coming to you as a practitioner, how do you see the data challenges here?
Yeah, I mean, absolutely. The emissions data and lack of of that is still an issue, but I do think that's improving, particularly scope 1 and 2. Scope 3 emissions data reporting lags, but you know, Laurent's touched on some of the kind of anticipated regulatory reporting drives that are going to help us there. But I think it is absolutely fair to say that consistency of that data and reporting across sectors and by different providers is patchy. And you know, as kind of bond investors, there's a lack of data coverage for private issuers in bond markets versus listed companies. So these are all considerations that as an asset manager we have. And how we try to kind of manage that is by, you know, not relying on any one provider for our research. You know, we use obviously external ratings and evaluations, and we incorporate those. But you know, we are realistic about, you know, how opaque some of those are, how over-engineered perhaps some of them are, and how some of them reflect opinions and views of the source. So you know, it's important to us to kind of do our own evaluation, but of course we need data to do that. And so, you know, it's that whole kind of digging through kind of a number of sources to help us make the most of what we've got while participating in these initiatives that push for additional transparency to come to market.
Okay, thank you very much indeed. Let's see those poll results and see how our audience is doing. And Elizabeth, would you like to comment on that when you're out in the market? Do you see something like that?
Sure. Sourcing required data, I think we covered on that. Scope 3 is challenging, as well as particular asset classes. And then I think the complexity of managing the data, and maybe that touches on the fact that this isn't about purely just carbon footprinting. There's actually a lot of portfolio calculations. So there's the challenge of, once you have the data, how do you apply that data to multi-asset class portfolios? Do weighted carbon intensity scores at portfolio level? For asset owners, there could be a challenge of knowing all the holdings, having that look-through capability into funds and things like that. So there is a lot of portfolio calculations that need to be done on top of kind of the core data itself. And I think the challenge, you know, we work with a lot of asset managers and asset owners, and if you're an asset manager, you're trying, you know, to invest to meet the policies of the asset owners, and the asset owners are trying to evidence that the asset managers are investing according to their policy. So you really need a transparent a way to be able to match all that data to your holdings, and then look and see if that's really matching your targets.
Okay, thank you, Elizabeth. I'm staying with you for the next question, which we have gone some way towards answering. You know, what best practice approaches can firms take to address these challenges? You've mentioned some, even mentioned what the outcomes need to be, but what would your sort of simple, not simple, but your quite straightforward advice be here? What should they be doing?
Well, I think it was interesting because the first poll said that not a lot of people have started on this journey, right? So that tells me a lot of policies have been set at a high level, but actually implementing that fully into your organization through your data processes, through your reporting processes, through your risks and compliance processes hasn't really started yet. So it sounds like policies are being established at a high level, which probably means a lot of spreadsheets, and spreadsheets aren't particularly strong when it comes to greenwashing risks. So it's really about having, you know, the high quality data that you trust, and is transparent, maximizing the coverage you have, having the ability to do those portfolio calculations, and having the dashboards and reports. I think there's a bonus if you can also find analytics tooling that actually kind of gives you insights into what you could do to get closer to your target. I think that's a bonus, but it sounds like the market is still maybe in that policy spreadsheet zone, but that will obviously change over time.
Okay, and Wendy, you're smiling there. How do you see these best practice approaches firms can take to the challenges? Obviously, you face some of those challenges. What can be done?
Well, I think as has already been mentioned, it's very clear that the actual data that we have today is not where we want to be or where we need to get to. So part of current good practice is going to be having to use proxying approaches. There are multiple sort of data sources that can be used to go and compile, and having a clear process for how you are going to apply those proxies. I think, again, to reiterate earlier points, there is a need for a significant amount of transparency around the limitations of the data that's being used. So, for example, the PCAF has set out the data quality standards around whether it's been auditable, whether it's come first from directly from the disclosures of the company, or if you've applied your own proxies and approaches to filling out the data. It is likely that you will have to do that because simply the ecosystems around this data is not yet where it needs to be. And I think it comes back to being very clear and transparent when there has been changes and movements in the data or some of those approaches, having an analysis of change so that then users can separate out how you're tracking against your decarbonisation targets, how much of that is due to the actual decisions or the underlying companies that you've invested in versus how much of it is just that additional movement around evolving methodologies and evolving data. So I think you need to be quite clear about that. And we always have, whenever we make our disclosures, we underscore the fact that actually the data isn't fully there yet, and changes and updates to that are going to impact on the results that we disclose. But that cannot be used to hold up our action. So we will still disclose on a best endeavours basis. We will tag it as that, make it clear that there is going to be further movement and volatility in it. But actually, we're still looking to use data-led approaches to be able to deliver on our commitments.
Okay, fantastic. Thank you very much indeed. And encapsulating all these problems and coming back to you, Anne, please would you tell us what types of actionable data management solutions are available and helpful here?
So well, CDP, I mean, their disclosures are sort of very helpful in allowing sort of consistency of data across the companies, and that goes beyond, data and targets. Those surveys provide important information on kind of corporate thinking, and in terms of those kind of tools, forward-looking climate transition tools to help you make sure that your portfolios are aligned with your clients' decarbonisation goals. We have a range of clients that have different different expectations that are on different parts of the journey as our audience today. So the ability to be able to do that is important. Temperature alignment tools are emerging from ESG providers, and again, there's lots of data out there. We're perhaps not there with some of it yet, but we have to, as asset managers, work out what data helps us and helps our clients, and then to embed that within processes. So certainly our kind of transition framework kind of has been developed across our portfolio management, our responsible investment teams jointly, and that kind of ongoing dialogue is really important. But that does take time and commitment from an organisation. So we're investing in risk tools and so on to be able to help us bring all of that together to be part of our kind of natural investment process.
Okay, thank you. Wendy, what are you finding useful here in terms of solutions for managing the data?
Well, I think the first is just having processes developed across your business that are able to actually consolidate the data and get a portfolio view, as well as being able to slice and dice and look at different sectors, different asset classes that will have different drivers that go through. We're quite fortunate that we have our climate solutions team that are able to provide us with that data and also the expertise to break down what are the movements that are coming through. So coming back to that earlier point around the drivers of the change that influence it. There's also just looking at a full metric suite and being able to understand what the different metrics are telling you, which ones are leading indicators, which ones are lagging indicators. So for example, a carbon footprint is historical reporting of what has been taken place, not necessarily what will be expected, but can be used as a driver to feed through it. And then I'd really reiterate again the importance of linking the different business areas and decision-making processes to be able to make sure that people understand both the limitations, but also the benefits and meaningfulness of these metrics, so that then it can really inform the decision-making process. Because at the end of the day, what we're actually looking for is better informed decisions to be made off the back of this. And you can't be making those if you don't really understand what the metric is measuring, how it works, and also some of its limitations.
Okay, fine. Thank you very much indeed, both of you. And moving on, let me come back to you, Elizabeth, to explain, in addition to data, what are the other critical elements of an effective ESG solution and perhaps strategy even?
Well, I think Wendy just touched on several of them, but I think if I were to zoom out and think about how client engagements have kind of changed over the last couple of years, I think 2 to 3 years ago, we were hearing a lot of discussion that the management of ESG data had moved from kind of that PMRI group that Wendy was talking about, and down into the data office, with the understanding that the front office teams really shouldn't be burdened with all of this data management. And pretty quickly in the last 6 months or so, clients have now come to us wanting to understand and have advice on what an optimal target operating model looks like, including technology across their whole system, with the problem that there's still a lot of spreadsheets across the whole organization. So obviously that goes beyond net zero commitments and reporting. That can be all sorts of investment decision making, client reporting, reg reporting, engagement, all the use cases that are happening across a firm. I see most of the clients we work with today who are coming to the market now looking for external solutions because they've been building all of this internally for a long time, but may not have the dream of being a tech company, want to stay in the asset management realm, have now come to the market really looking for services, technology, functionality that can scale. I think that's the biggest challenge, is really, how do we have that single source of truth, that we can have trusted data, and then how can we scale that across our organization for whatever the next requirement will be from the market when it comes to sustainability.
Okay, thank you very much indeed. And what would you add there in terms of the sort of wider remit beyond data? What are data is anything?
I mean, certainly for us, how we think about it is, in addition to data, the critical elements are, qualitative thinking on what the data actually means. I mean, that's something that, you've got to kind of take and kind of process that and think about what that means and how that helps your decision making process. Engagement. As another critical element of a solution. It's not only encouraging kind of changing behaviours from corporates, but an opportunity to learn. That is a two-way dialogue. How does that inform your decision making? And we've touched on it already. That kind of integrated process, not only the responsible investment and portfolio management teams working together, but the data management and reporting tools to enable that to be conveyed and to be very clear and transparent are critical.
Okay, thank you very much indeed. And joining this all up, Laura, we've talked about the data, we've talked about the other things, the
So if we are
quality.
talking about, it's
I was
also
just gonna
linked
say,
to. Sorry.
how do you join it? How do you all join it all together? Obviously, there are different elements.
No,
Yeah.
with
How do you all
okay.
join it all together?
I think that so we are also talking about the good strategies to try to help serve the objective and not the other way around. I mean, our problem is that we have our system is not at the disposal of the objective, as you know. It should be the other way around. You know, we have the objective, and then we put all our system, economic and financial system, at the service of the objective. But that's not how it's working right now. But we will probably have to change that in a very, very short term. But what I am thinking is that yes, data is critical. Data per sector to be able to make comparison, trusted data, source of truth. I heard so many great terms there. I think that there is a winning combo that all investors should be asking to their companies, is to have scope 1, scope 2, and scope 3 emission reduction target approved somewhere, ideally by the Science Based Target Initiative. Seems to be the best approval system of scope 3. Aligned to 1.5 and much better net zero. For example, if I take the figure of SBT now, I think worldwide there are 2,300 SBT 1.5 approved companies only, but still it's 2,300 SBT 1.5 approved company, and only 200 company SBT net zero approved. You know that SBT now can approve net zero, only 200. So that's and on the financial institution side, there is something like 100 financial institution approved by SBT 1.5. Now we need also, on the top of this, we need to have a transition plan. We need to have organization explaining how they are going to serve the target, how they are going to achieve the target. And we have very little transition plan. I think this transition plan should absolutely be put at resolution level for a General Assembly. But with the real weight of the voting system, you know, if you have 60% of the investors voting against, it doesn't, board could not make it pass, and this is what's happening now, which is crazy, you know. For we see that very often, at least in the Netherlands. But we made an analysis with Oliver Wyman for the companies based in Europe. It was based on 1,500 companies responding to CDP, and 50% of them said, yeah, very good, we have a transition plan. And then when we dig this, we were very, very, very deep into the detail of the analysis. We have a 21 question at CDP that we deem be the right transition plan. We call that the transition planning tool of CDP, 21 question, 9 subcategories. When we went into the detail, we saw that only 5%, not 50%, 5% of companies were both SBT, aligned with 1.5, not only with SBT 1.5, but aligned with 1.5 and validated, and having a credible transition plan. And the credible transition plan means that they respond to at least 66% of the 21 questions. So we're not there at all yet. And investors should be really engaging much more and pushing companies to write a transition plan. And the good news, again, maybe I have an obsessive view of what's happening in the EU, but I really believe that what's happening in the EU should be the showroom of what should happen in the world. There is a directive in the EU called the Corporate Sustainability Due Diligence Directive, which is obliging companies above 750 people to have a transition plan aligned with 1.5. And it is because it is obliging them to have a transition plan that they are obliged to report that in the CSRD. So it's all, and this is the transparency landscape, right? To try to create things that are going to be transparent and audited. We are talking about the quality of the data, where there will be a surge of good quality data, maybe not enough, but still better than nothing, coming in 2025 with this set of directives. So I think the winning combo is transition plan explaining how you do 1.5 ideally or net zero target, And then SBT, we are all waiting for that. And maybe now that they changed that governance, which is a very important news that was announced last week, maybe now the next phase of SBT, we know that we need to see, they need to check every year how the company are doing against the target, how much was made in 1 year and what's left to be done, and to see the pathway, because that's what investors are asking also. What's the result, the performance against the target? So if we have this, then it would be a good sign for the market. But again, we are very, very late, so we cannot be satisfied of what's happening now.
Okay, fine, thank you. Wendy, a brief comment from you, if you would, about sort of the practical side of putting all this together. Obviously, the data is very key, but as you mentioned, it's got to have some kind of meaning across the company.
Absolutely. And I think just this year we were able to publish our transition plan, and a really useful tool that we used was engagement with the transition plan task force that set out standards and additional guidance on expectations. So using what is out there and being able to pull that together. I think the main thing is you want it to be as data-led as possible, because that gives credibility and ability to track progress, hold yourself to account. But also it's really important to actually be clear about what your plans are and how you can get started. You understand your sphere of influence, and we are all are familiar with the general direction that needs to be gone into. So actually be transparent about where you need to do further work, but how you intend to get there. It's so important to have a baseline to be able to measure progress against it. But even just measuring that baseline and understanding it is a big piece of work that takes time, that needs to just really get started on.
Okay, that's great. Thank you very much indeed. Let's take a break for some audience questions. I'm conscious of time, but let's see if we can answer some of these fairly high level. So let me come first to you, Elizabeth. This one asks, I would like to ask the panel how an FI can become competitive in the ESG market.
Oh, an FI? A financial institution?
Yeah.
Okay.
Yeah.
Well, that's a very big question. To become competitive, well, I think, there's obviously sustainability has been seen and sustainable investing has been seen as a big opportunity for asset managers for a long time, right? And we saw a little bit of a pullback starting last year, some outflows of capital in the US, some further reporting requirements coming out of SFDR that kind of spooked the market a bit. So I think there was a probably needed kind of correction to make sure that everything that what's going on in the market isn't greenwashing, right? So to be competitive, there's obviously a growth opportunity, but with that you need to be authentic and transparent and data led, as Wendy just said. So I think that's probably the area for growth. And at the same time, you want to protect yourself against risk so that you're not caught selling product or making commitments that actually aren't being followed internally at a firm as regulations grow. And as an asset owner, I mean, you also have your beneficiaries that are highly motivating your strategy and the retail investment community. So I think you would want to consider those very much in your plans as well.
Okay, lovely. We have a question on the other side of this, and let me come to you with this one. It says, what does the panel think would happen to financial firms that don't embrace ESG to the fullest extent? I'm sure they'll be fine, but will they be doing something else, or how will that be happening, do you think? It's obviously something the big banks think, not big, smaller banks will think about when they're starting along these routes. What do you think will happen if they don't do this?
Well, I think the reality is that our role in financial institutions is to manage risk, and the real world cannot be entirely kind of decoupled from that. So the reality is that climate transition and adaptation risk is here to stay, and therefore, you know, has to become part of how we kind of manage investment risk, and so therefore, I think over time, there's a reality that you know, those that do not kind of, you know, those organisations that do not adapt are likely to kind of face sort of financial kind of repercussions to that. You know, where there, you know, there is a reality that those that kind of embrace the transition and come up with solutions will be kind of more investable organisations.
Okay, thank you very much indeed for that. These are quite high level questions, but they're tip-top ones amongst our users. So let me come to you, if I may, Wendy. And this one asks, how can firms avoid throwing money at ESG in the hope of getting it right? I think you've talked about quite a few of these things, so we'd just like to sort of regroup on that.
Yeah, well, I think ESG as a topic is huge. So I think the most important part is to actually think about your sphere of influence. Carry out a materiality assessment. It's incredibly challenging, but actually you need to focus on what are the material risks. Climate change is a systemic risk that is going to emerge. So I would say that's up there in the materiality assessment. But it also helps prioritize your resources. You know, you do need to be quite focused, and then we can look to expand. But at the same time, there's a lot of pace and change here. This is an evolving new area. So familiarity and understanding with the regulatory legislative framework that you're operating in will also influence on it. Understanding your investment risk and how ESG is translated into that, how it impacts on your main risk drivers, and then being able to pull out data-led insights into where to actually focus. So for example, if you're starting with assessing your portfolio, it's really, what are the high carbon sectors? How exposed to them are you? Which is not a hugely expensive exercise to carry out, but it gives a good idea of where to focus your effort before drilling in to the more useful metrics that can help take you to the next level of analysis. So there's a pathway of building up that complexity where you can still be making some really good informed decisions as you go down there.
That's great. Thank you very much indeed. I think there is some fear that a lot of money is being spent here to what outcome, and obviously a process like that will certainly help. Thank you very much. A quick question for you, Lauren. It asks, how can people be part of the Net Zero Asset Managers and the Net Zero Asset Owner Alliances? Are there websites where they can just sign up? Or you're on mute, I think.
I think the exact process I don't know, but you should make a request on the website, or if you are signatory of CDP, you can send an email to your account manager, and then we will provide you with the right contact, because CDP is one of the founding member of the Net Zero Asset Manager Alliance. And for the Net Zero Asset Owner Alliance, I guess you should, I mean, the account manager can help you, but you should directly go to the, I don't even know if there is a website of the Net Zero Asset Owner Alliance. There is a website for the asset manager. So that's what I can tell you. I mean, if you have any question, you can send me a private email and then I can answer that.
Okay. I just websites for both.
Sorry,
I was just asking others. Do you know if there are websites for both?
Yeah, there is a website for the Asset Manager Alliance,
Yeah.
Asset Owner Alliance. I'm not sure there is one. I don't know in the group if you can answer that. And worst case, you send me an email and I can answer you if there is. Okay, my email is laurent.babiquian@cdp.net.
Wendy.
Yes, there are websites for both the organisations. There are membership criteria that it is definitely worth carrying out an internal assessment against in advance. For example, for the Net Zero Asset Owners Alliance, there is a target setting protocol that requires your targets to be set to a certain level aligned with science. There is normally a contact us on the web pages, so I would say that's definitely the first place to go through to, but make sure that you understand the full breadth and scale of the commitments and the data that will and reporting requirements associated with them.
Thank you very much. You've obviously done your research there, Wendy. Thanks a lot. That's great. Okay, we have more questions, but we really need to get back to our questions. So thank you to our audience for your questions and to our speakers for their answers. And back to my questions, and something we've talked a little bit about earlier, and it's that the science board-based targets. I apologize. How do these help asset managers and owners as they move towards a sustainable future?
Yeah, I'll be brief and mindful of time. I mean, the sector resources that SBTI produce are really useful and kind of help thinking about how we look across kind of different sectors. What they do is they provide clear guidelines and definitions of what a good climate target looks like. And it certainly helps asset managers like us and our clients with regards to kind of consistency in terms of standards and targets. And of course, sort of validation of those company targets are useful. And that is a step that is a very important one in terms of analysing that company's transition strategy. Have they done what they say they're going to do? And then you can go on from there and look at their governance and policies and how those then align with what they say they are going to do and what their ambitions are. But of course, that core data is important as a start point.
Excellent, thank you. Let's move on, and I think we just about have time to run a final audience poll. It asks, what extent of benefits does your organisation gain or expect to gain from a successful ESG strategy? So while you vote on that, let me come back to you, if I may, Anne, and talk a little bit about what you would expect to get from a good strategy.
So, you know, from an asset management perspective, you know, companies that adapt to the challenges of net zero are more likely to capitalise on low carbon transition, drive revenue growth, lower their operating costs, and therefore produce sustainable cash flows and have good resilient business models. Our job is to identify those. So we look at it from a bondholder perspective. We're looking for organisations with more stable cash flows. They'll repay their obligations and provide, you know, potential for alpha generation. And from an equity perspective, companies disrupting the status quo, driving innovation for the low carbon economy, then they'll present very attractive upside potential there. And then on the flip side, we touched on it earlier, those ignoring the transition and failing to kind of pivot are going to be at a higher risk, we believe, of default and deteriorating market value. And, you know, investors therefore will reallocate their capital to much better aligned options. And so therefore that's our role, to kind of make sure that we've got a strategy that identifies those and help our clients accordingly.
Lovely. Wendy, how do you see the benefits of pulling together everything we've talked about together today?
Well, firstly, I'd start with saying I absolutely agree with the points that Anne was raising. So I'll try and take a slightly different angle so we can hear a different voice. And I think one of the ones that could potentially be overlooked is how actually having a really good strategy can help as a communication tool. So it can be communicated across your business to engage your people, your staff, also to understand what their role is and how they can contribute towards it. It also helps with communicating how you're managing those opportunities and risks to be able to make the most and sort of optimize how you are responding to some of the biggest themes that are impacting the whole sectors that we work in, as well as the businesses that we invest in as well. So it really helps with that clarity, that purpose, and being able to sort of drive and reinforce its own strategy.
Okay. What do you see out there in the market, Elizabeth, in terms of the benefits that people are achieving?
Sure. Well, obviously, there's growth and the avoidance of greenwash and risk, right? I think, you know, as Laurence pointed out, we're all moving too slowly, right? There's a lack of resources in the market. And how do you scale this type of work, right? ESG data and ESG in general has moved fully into investment processes like any other financial data point, right? Although the data is much more complicated. And there's just a fast evolving universe. So from my point of view, it's how do you balance the resources you have? How do you scale that quickly? How do you be a data first led organization? And I see a lot of asset managers in particular building a lot of things internally. And some have done so for a long time because there was no other solution on the market. But I think the best ones who are able to move and scale really fast are really reconsidering what do I want to build internally because it differentiates me or generates alpha, and what do I want to not spend my resources and money on building internally and find partners in the market.
Excellent, thank you, which brings us to our final question for today. And I would like to ask, oh, I'm terribly sorry, I forgot to show you this. So yeah, I've been looking for significant business benefits. Wendy, does that look familiar to you?
Definitely. I think when you have a period of disruption and sort of massive change, this is also a huge opportunity for investments. It's certainly something that we see at Legal & General, where we have addressing climate change as one of our 6 strategic growth drivers.
Okay, thank you very much indeed for that. And now to our final question for today. And I'd like to ask all speakers for a little bit of advice for our listeners who are working on building successful ESG strategies. So Nora, a few words from you.
Yeah, as I was saying, you need to become as a financial institution to align yourself on net zero. Some framework are much stronger than others. I'm thinking about the Net Zero Banking Alliance, where they need to calculate the carbon footprint of the most emitting sectors after 18 months when they sign the commitment letter, and based on the scope 1, scope 2, and scope 3 of the companies. Because now what's happening on the market, if you were asking what's the carbon footprint of the financial sector, we don't have any clue. We know very well what's the carbon footprint of the oil and gas market, but we don't know what's the carbon footprint of the financial sector, because most of the carbon footprint made by investors is based on scope 1 and 2, and scope 1 and 2 is only 20% maximum of the full scopes, full emissions of a company. And the Net Zero Banking Alliance asks to have systematically. So I don't know about the Net Zero Asset Owner Alliance. I hope it's the same. And there are some flexibility for the Net Zero Asset Manager Alliance still. And yeah, to go through this process so as to build portfolio aligned with net zero. And what I would say also is really the climate transition plan is not the transition plan, because we will need a water transition plan, we will need a biodiversity transition plan. So the transition plan of companies and investors themselves is fundamental, and it must be submitted at the General Assembly. And then, yeah, I had a comment on why can we make money by doing an ESG strategy? There was one question. I think so. It will be for another discussion, because there are lots of things to say there. We need to change the way we envision and the performance of the investment.
I'm going to stop you there so we can hear a little from the others before we run out of time. Anne, can I come to you? A little bit of advice for our listeners.
Yeah, I would just say we would kind of say that think about what companies aren't telling you. Be critical about companies' climate commitments relative to the progress they've shown in recent years. So, you know, cast a kind of critical eye. Don't rely on just kind of backward-looking emissions to build your ESG solutions. Climate benchmarks can be somewhat kind of guilty of that. Look at forward-thinking solutions as well. And consider how high-emitting sectors are part of your solutions. You know, that whole kind of way of, you know, you're not thinking just in numbers. Think about what your real-world impact is as well.
Okay, Wendy, a few pieces of advice from you.
Yeah, so I have a couple of points. The first is stakeholder engagement. It's really important to take others with you. This is a piece that does require that. Look across the full value chain. That's where a lot of potential risk lies if you're not looking across all of aspects of your operations, your influence, as well as your suppliers. Transparency is really important because actually, as we know, this is evolving, it's rapidly moving. So be clear about what you are doing, what you're not doing, where you could do more, and where you're going to be focusing on and developing. And absolutely, materiality assessment, take a materiality-based approach to where you focus your resources.
Thank you. Elizabeth, some final words from you, please.
Yes, I think those were all great points. I'll just add collaboration. This is a huge space. There is no such thing as an ESG expert. We all know bits and pieces of this huge space. So, and it's really open to collaboration. It's an area that people love to engage on. So, just reach out to your colleagues and others in your firm, and I think you'll be successful.
Excellent. Thank you, Elizabeth, and thank you to all our speakers for sharing their expertise and experience. Thank you too to Rhymes for sponsoring today's webinar. Before we close, just a few 18 group events that may be of interest to you. If you scroll down your screen, you'll see that we're in New York next week, and you can sign up to join 18 Group's The Data Management Summit NYC. It's next Thursday. Or you can register for our 13th of October webinar on how to develop a reporting framework for ESG disclosure regulation. And on a completely different topic, on the 17th of October, you can join our webinar on proactive RegTech approaches to fighting financial crime. That said, that's it for today. So thank you again to Elizabeth and Wendy and Laurent, and thank you to all of you who've taken part in the webinar. Please complete our feedback form, as we're always keen to hear your views and improve our products. Meantime, thanks again and goodbye.
Thank you. Bye-bye.
Thank you.